give us the commodity outlook as well as the kind of strategy that we need to follow as well. Kunal, firstly, my question coming to you is especially in terms of where crude is concerned. Now, yesterday we were even talking about whether crude would actually hit that $40 per barrel mark. What is the outcome that could be expected as of yesterday? Now, today, as we've been discussing, that the option is that between 7:45 to 8:30 p.m. is when we could be expecting something out of the OPEC. Any new developments that you could give us that are happening right now?
Well, first of all, the major development taking place in crude oil market is that lots of producers are facing problem to store crude oil. So whatever they are producing right now. So in the history, we've not seen such lockdown where so many countries are locked down across the world, and that has basically led to major drop in the oil demand. So may it be from the aviation sector or may it be from the transportation sector, everywhere we've seen a major drop in oil demand. So now it's a need for an hour for OPEC to deliver the cut. So what market consensus is that OPEC should come up with a production cut of more than 50 million barrels. So when I say 50 million barrels, is that is 15% of the global oil supply is now going to be sucked out from OPEC and OPEC plus. So there are no new development, but whether the production cut will be higher than 15 million barrel, then definitely crude oil is going to shoot up another 10-15% during evening session. If the production cuts are lower than 10 million barrels, then I think this rally will not hold on. It will again fizzle out. If you ask me what is going to happen at 8 o'clock, I don't know honestly what OPEC are going to decide. But this kind of this is unpredictable time. This is we've not seen such kind of scenario. So I think OPEC and Russia would act in the interest of the oil market rather than the personal clash what they are going through. So Saudi, who has been telling to increase their production by 2 million barrels, now they have to cut the production another two. So US, Saudi, Russia, if all these producers cut the production more than 15 or 20 million barrels, then I think oil will rally. So my gut feeling here is that there has to be a strong action by the oil producers, and hence we are going to see that oil prices will move up post meeting. So I will advise everyone, please do not take long position, especially do not take position in options, because on Monday we are going to see a major either gap down or a major gap up. So if somebody wants to take a call, the call is definitely for the upside. My view is that it should go up rather than going down. So 2200, 2300, these are kind of levels one should expect post the OPEC meeting. But don't carry any leverage positions. Consider 10, 15, 20% move, and that kind of margin if client is having, then only advise them to make positions. Otherwise, do not carry over the positions.
Right. So, Kunal, are we trying to say that number one, 15 million barrels per day, if that's the quantum of cut or more, little above 15 million barrels, if they decide, there is a possibility of a further upside that could be coming in terms of crude. But if the production cut gets limited to say around $10 per barrel or something below that, then there is a complete possibility of this rally that we are seeing lately that could be completely fizzled out.
Yes, if the production cuts are less than 10 million barrels, then I think this rally should fizzle out, because we are seeing the demand destruction to the tune of 20-25% of the demand destruction is taking place right now. So supply side also needs to be taken care of. So if the supply side is not reacting, then I think oil will again go down. So just anything below 10 million barrels and you are going to see a sharp drop in oil, and I would expect oil will again go down, say by 10 to 15% if the production cut is not more by 10 million barrels.
Right. Kunal, again, all eyes right now are on the OPEC plus meeting as well, which could probably actually result in the supply cut, but the quantum of supply cut is something which is in a dilemma right now. 10 to 15 barrels, that's the broad range that we have been looking at. That is, again, we've been talking from the supply side. But if you have to take into consideration the demand side as well, with COVID-19 having an impact on this entire sector as a whole, what is the sense that you're picking up that the demand side could have an impact with regards to pricing?
Okay, now this is a very good question, because if the demand, if you say till when this demand destruction will go on, this
Correct.
demand destruction will go on till we see any the moment this lockdown is lifted. At that
Mm,
time, demand will start resuming back in the market. But right now we are seeing 20 to 25% of drop in demand, and the country like Canada, they are not having storage. So, for example, Canada is producing 5% of the global oil production. That is the number what I am talking about, and they are running out of storage capacity. The storage tanks are full over there. So what they are going to do? Even they will have to cut the production. So demand is
correct.
down by 20 to 25%. The supply also should respond at least by 15 to 20%. So this is temporary phenomenon. These production cuts are not something, it will carry on for 1 year. So they will definitely tell in the meeting that these production cuts are for 3 months or 4 months, something like that, because they cannot afford to lose 15% of the supply immediately. So I think it should take 1 month conservatively, and I think then the demand should slowly and gradually. In China, the lockdown is lifted in Wuhan, so the Chinese demand is definitely going to be. China added crude oil at $20 in their strategic petroleum reserve. So for country like China, it is boom. So right now, the other parts of the world where the lockdown is going on in Asia, in US, in Europe, in Japan, in Australia. So these are the parts where the demand is going to drop. So I think there has to be an action by OPEC Plus till the lockdown is lifted. They should cut the production, and demand loss is also very big right now.
Right. So we will come back to you as well on your thoughts as to what comes out of today's meeting tomorrow. But apart from that, on the precious metals front, you have been bullish from a very long time, especially in terms of gold. You have silver, which is also playing a catch-up rally. What's the strategy on that front?
Gold, what happened in 2007-8, the similar scenario is now developing in 2007-8. After the recession, Federal Reserve and other bankers, central bankers, started to print notes. But right now we are not printing notes. It's like a helicopter money. The way central banks are printing, the size of Indian economy is $2.5 trillion, $3 trillion, and Federal Reserve alone is stimulating the economy by printing $2 trillion. So
Correct.
size of the Indian economy is now getting printed by Fed, and this is not it. They have said we will still print if the economic weakness continues. So that is the reason why, in spite of there is lockdown across the world, the stock markets are also rallying from last 4 days, 3 days. Things,
Hmm.
metal prices are also rallying because the liquidity is getting parked into this thing. So such kind of liquidity, whenever it comes, the structural view of gold is very bullish. So forget about the correction of 500 rupees, 1000 rupees fall of gold.
Correct. Correct.
Trend will be on the upside. In 1 or 2 days, you are going to see levels of 45,500, 45,000, 45,500 to 45,550. But in a longer run, we are going to see another bull run, and gold will test 48 to 50,000 rupees on MCX, and on COMEX, it is going to test $1,800. These are my conservative targets.
Right. And apart from gold, again, what's the view that you have, Kunal, especially on the precious metal front?
In silver also, we are expecting the similar move because the base metals have also started to rally after the Chinese number have come good, and we are not expecting a major rally in base metal, but silver also should do a catch up and should test 44,000, 44,500 in a short term. And in the long run, I would not give extraordinary bullish target, but 48 to 50 looks very much achievable. And the last complex to discuss is base metals. So in base metal complex, what is happening is all the major producers are now cutting production, like what is happening in crude oil, because the excess glut which is developed in last 1.5 month and next 1 month, 2.5 months of glut is building. So they have to cut the production. So because of the production cuts, the downside will be limited in the base metal complex. And I would not recommend any aggressive strategy for copper because it is already rallied by 40 rupees. But zinc still looks very attractive. 155 is the target, 149 is the level to go along, and put a stop loss of 147 and expect prices to test first 153 and then 155.
Right. Thanks, Kunal, for getting us your view, especially in terms of base metals. Crude is the talk of the town right now. 10 or 15 million barrels per day cut, that is something that could be on the cards as well. Where it swings will entirely depend on the supply side. Right now, we will touch base with you back again tomorrow as well to understand as to what should be the strategy from here on. Thank you, Kunal, for joining us on the show.